Warmly welcome, everyone. Thank you for joining us today on this webinar. It's great to see participants joining from across Europe and the UK. We appreciate you taking the time to join this session. My name is Anna-Stina Wiklund. I'm an advisor in responsible investment and a founding advisor of the Global Advisory Alliance based in Spain. At GAA, we work with companies, investors, and public institutions that want to turn responsible investment into credible and practical action. We are very pleased to host today's session in collaboration with Responsible Investor. The topic of today's session is responsible defense investment, fiduciary duty, ethics, and the European investor context. With that, I'm delighted to hand over to Dominic from Responsible Investor, who will be chairing the discussion today. Thank you, and over to you, Dominic.
Thank you, Anna. I'm Dominic Webb. I am a senior reporter and lead on our defence coverage at Responsible Investor, and I am also honoured to be leading the discussion today. Since the Russian invasion of Ukraine, defence investment has undergone something of a renaissance. Huge increases in defence spending and a shift in attitudes towards the sector have led to many investors reevaluating their exclusions policies, and increasing investor interest is driving the launch of new defence-focused funds, as well as increasing capital allocation in private markets. However, intensifying global conflicts, increasing use of AI and autonomous weapon systems, and a lack of transparency in supply chains and customer bases, not to mention the significant human rights risks, make defence a veritable minefield for investors, if you'll excuse the joke. To discuss these issues and how investors are looking at responsible defence investment, I am delighted to be joined by a distinguished lineup of panellists. You have already met Anna, but I am also joined by Aleksandra Palinska, who is Executive Director at Eurosif, Linda Sundberg, who is Head of Sustainable Investing at the Church of Sweden, Camille Visconti Saint-Julien, who is Human Rights and Social Lead at the Banque Postale Asset Management, and Daniel Neal, who is Social Lead at the Church Commissioners for England. We will try and have some time for questions at the end, so please do send them in for our panellists as we are discussing. But on with the topics. So starting with you, Linda, Sweden joined NATO in 2024, and the government committed in September to hike military spending to 2.8% of GDP. Against this backdrop, could you share how your approach to the defence sector has evolved since 2022?
Yes, and I want to start with that we understand the debate to invest in the defense sector since the Russian invasion of Ukraine, and we respect that others make different judgments than we do, and we try to be clear about where our line sits and why, but our position on weapons hasn't changed, and our financial policy and investment guidelines apply an absolute prohibition on investments in companies that develop, manufacture, or sell weapons and war materials central to combat functions. What has changed since the Russian invasion of Ukraine is the intensity of the conversation around the edges of our policy, particular around dual-use products. And here, both our policy and guidelines have been updated to recognize that products with both civilian and military applications are not automatically excluded. These are assessed case by case based on whether the product materially contributes to combat capability and whether it's the core business of the company or a marginal element of the company's business model. And as you stated, that Sweden is part of NATO now, we respect Sweden's democratic decision to join NATO. We respect every country's right to defend themselves. That's a matter of national security policy, not investment policy. And our responsibility as a capital owner to manage church assets is in accordance with our values and our mandates. And those are different domains. So Sweden can be in NATO, and the Church of Sweden can decline to invest in weapons. These positions are not in contradiction, according to us.
Thank you. And maybe from a slightly different perspective, Dan, the Church Commission has changed its exclusion policy late last year. Could you walk us through some of the changes that you made and the rationale for this change?
Well, the key part is that the changes there was going to be an update made. The last time we updated it was 2010, so it was sort of in the program before the investment kind of context changed, even probably before Ukraine invasion. So we previously had a sort of blanket approach. So if we discount the controversial weapons piece and look at a 10% revenue threshold on any companies that were basically enhancing combat effectiveness is the way to look at it. So that would capture a very, very broad range of companies involved. That was in 2010. Since then, we've had the UN Guiding Principles on Business Human Rights. We have an in-house responsible investment team with sort of social specialisms in there. We've adopted our own human rights policy. And so the old policy was also quite out of date. We saw things like very, very binary, like companies are in or out, sort of good or bad in inverted commas, no integration of a human rights due diligence approach. And what that meant was things like we draw those fine lines that you could invest in a massive conglomerate that makes 9% of its money from selling missiles, but you couldn't invest in a UK company that made clothes and 12% of its money from selling uniforms to the Ministry of Defence. So we knew that it had to change. In terms of what we've done, we've taken that blanket approach and tilted it on two axes. So we've taken a geographic approach and said, well, here's us in the United Kingdom, and here's what we might look as oppressive regimes, and then we've got sort of close allies, and then we've got the rest of the world. And so we drew a sort of a line around there from home to oppressive regimes. And we also do a bit of a line on sort of the proximity, if you like, of the products and services. So weapons down to weapon-related parts and services, non-weapon-related parts and services, and then underneath. And so when you look at our restrictions grid now, it looks more like a sort of typical 5x5 risk matrix with a heat mapping on it. And so it gives us a sort of better starting point. But I would say the key part that's just the exclusions, and they can't be seen in separation from our human rights approach. The exclusion is just the starting point and drawing these sort of fine lines. But we've also introduced the ability to like look at those edge cases and to say, well, actually, if a company makes 12%, should we look more at the company rather than just completely exclude them on the basis of that 2% difference in revenue? So there's been quite a lot of change, and it was quite a lot of discussion to get to that point.
Okay, thank you. And I think we'll come into those discussions maybe a bit later. Turning to Camille, how has LBPAM's approach evolved? And as an asset manager, have you been tempted to join the gold rush for defence-focused funds?
Hi, everyone, and thanks for having me. So just to clarify, our approach has not changed or evolved in the past few years. But basically, we were receiving more and more questions from clients, external stakeholders on the matter. And given the context, it basically felt necessary to clarify our position, our key expectations for the industry, and how we wanted to operate should we invest in the industry. So in a few words, the overarching standard that we apply and use is our human rights policy, which outlines basically how we intend to implement human rights due diligence within our investment processes. And basically the defense policy that we published last year is a practical application of this standard to a very specific type of companies, which is defense-related companies. To sum up our position in a few words, we recognize that defense is essential for the sovereignty of states. However, like all the panelists already said, we recognize also that it comes with a certain number of risks and issues that are critical and that need to be taken into account in our responsible investment approach. So more specifically, we obviously pay attention specifically to downstream due diligence, to the capacity of companies to identify human rights risks, but also international humanitarian law risks in relation to their products, services, and clients or main clients. We then clarify how we expect companies to implement human rights due diligence, and this I will probably talk a bit more later on when we'll talk about grid, and also how we intend to engage with companies on the matter. Finally, I think it's important to also clarify that we do not have any specific criterion applicable to the defense industry that would qualify a specific social contribution for that type of companies. So no sustainable defense rules for the moment. And with regards to your question on a defense-themed fund, for the moment, no. We are working on larger definitions and larger themes such as sovereignty, but definitely not just defense for the moment.
Okay. Thank you. And Anna, taking maybe a slightly more zoomed out approach, could you talk about some of the trends that you've seen across the industry when it comes to defence? And in your former role at the Church of England, how did your thinking evolve there?
Sure. Thank you for the question. I definitely see a few trends now when I'm based in Spain and from previously being in the Nordic countries on how investors view defense as an investment. Previously, a lot of investors just excluded or avoided defense-related companies, but definitely since 2022, there's been a big change, and I would say particularly in the countries like Finland, Sweden, and Denmark, you've seen change on the policy level so that defense investments or maybe weapons in particular are allowed more broadly than before this Russian invasion of Ukraine. But at the same time, if you compare to Southern European countries like Spain and Italy, on the policy level, you haven't seen big movements. But again, if you look at how capital is allocated and the fund flows, the trend has been quite similar across Europe. So that's quite an interesting distinction that you can see policy moving in tandem with capital in the Nordics, while in South the capital is moving faster than policy language, which is quite interesting. But other than that, I would see also that just having blanket exclusions, they have been more moving forward to more nuanced assessments. It's not anymore a black and white picture, but investors ask more what kind of defense activities are companies involved in, under what kind of governance, and in what kind of geopolitical context do they operate. And then, of course, there is a really big demand for practical frameworks, and I would say this grid work is very timely at the moment. And I would say this brings me naturally to your question about how the work at Church Pension Fund Finland evolved during my time there. So I left in 2024, and until that day, there was developed gradually an approach to how defense companies or how defense in general are seen. And there was clear exclusions on both conventional and controversial weapons, but also more broadly, there was a tool used from the RIAA, the Responsible Investment Association Australasia, where human rights and armed conflicts are analyzed. And I think that's a very valuable tool. It helps to create a systematic process by identifying conflict-affected areas and also mapping portfolio exposure, and of course defining how investors can engage with these kind of companies to mitigate the risks. So all in all, I would say that shifting the decision making from just reacting to headlines towards having a repeatable and defensible process was something especially important for institutions like the church, where transparency and ethical justification are of big essence.
Thank you very much. Now, Aleksandra, from where you sit in Brussels, excuse me, we have seen a lot of talk from regulators and policymakers on the need to crowd more private investment into defence, both on the EU and on many national levels. Could you walk us through the European regulatory context here, and how has the Commission been looking at the topic, especially when it comes to the sustainable finance package?
Happy to do so. So indeed, focusing now on the EU regulatory framework, in particular with regards to sustainable finance, the Commission has been clarifying, I think, multiple times that actually the EU sustainable finance framework, including SFDR, so the Sustainable Finance Disclosure Regulation, is sector agnostic. And therefore, that means that regulations like the Sustainable Finance Disclosure Regulation do not prohibit investment in defense, However, it does not necessarily mean that defense should be categorized as inherently sustainable either. So maybe just walking through some key points, and once again, emphasizing that from a purely regulatory perspective, there is no barrier to investing in defense. However, at the same time, if we look at the core elements of the EU Sustainable Finance Framework, in particular, Sustainable Finance Disclosure Regulation, to qualify as sustainable investments, investments must meet the criteria like, well, they have to make a substantial contribution to environmental or social objective, and then also meet the do no significant harm criteria. Of course, many of you might also be familiar with the EU taxonomy regulation, which prescribes for much more, I would say, granular technical screening criteria and more granular do no significant harm criteria with regards to environmental investments. But again, this is the core focus there. In terms of sustainable investments under SFDR, again, the framework is broader because it does not focus on the environmental, but also covers social aspects. But at the same time, in terms of the do no significant harm assessment under the current framework, there is quite a lot of leeway for investors to actually assess that using the so-called principal adverse impact indicators, whereby indeed one of them is an exposure to controversial weapons, and also, for instance, human rights violations. But anyway, this is a framework which is still largely risk-based, which, of course, analysis of ESG risks is also one of the, I would say, very important components of ESG investments. So indeed, I would say here what happens is that eventually the entire framework contains the tools that investors can use to assess defense investments, and eventually also have the judgment in applying them. Of course, also sticking to their fiduciary duties and responsibility to consider the end client preferences and the values and I would say and the mandates put forward by them. So once again, to cut the long story short, in terms of I would say exclusions, indeed exposure, well, in terms of the exposures to controversial weapons, yes, investments in controversial weapons are forbidden. Now they have been also, I understand, recently actually the wording has been changed to prohibited weapons, and that is what's going to be clearly also reflected now in the review of the Sustainable Finance Disclosure Regulation. What it means, prohibited weapons, though, is also not really quite straightforward, because it depends actually on how each country within EU is actually defining that, and it makes reference actually to the international norms. But again, nowadays, as you may know, I think, not all EU countries have signed up, all of the international treaties in the context of, I would say, weapons and defense. Hence, there may be a little bit of a kind of a variation. Well, in terms of actually the do no significant harm or the principal adverse impact indicators, I mean, this will be kind of changed in the new SFDR framework as well, and this is still being negotiated, so let's see how that's going to evolve further. Another important component, of course, is the human rights violations, and the fact that normally indeed sustainable investments already currently have to also follow good governance principles and indeed avoid human rights violations. The so-called PAIs, they are referring to the UN Global Compact and OECD guidelines. So this is where we currently stand, and once again, the Commission's approach, and in general the EU's framework approach, has been to keep the framework flexible, sector agnostic, principle-based, And that means that investors can basically invest in defense, also include this kind of investments in ESG strategies. But of course, they have to, carefully assess ESG risks. They have to justify it, and they have to disclose it clearly. So the bottom line is the framework leaves the final judgment where it belongs, with the investors and the end clients.
Great, thank you. Thank you very much for that overview. Now, you will have heard the acronym GRID used already a few times during the start of this webinar. So I'm going to hand over to Daniel, who's going to explain a bit more about what these 4 letters mean and the work that he's doing with other investors.
Where would we be without adding another acronym or capitalization?
Like a klaxon that goes off.
Yes. Sorry, we're doing another one, and we ditched one and embraced a new one. So I'm not going to go into all of the context, because everyone should be aware that there are distinct financial, reputational, human rights, and legal risks relating to defense-related investments for companies and investors to manage. So GRID, G-R-I-D, stands for Guidance for Responsible Investment in Defense-Related Companies. So we have a steering group now, which is mostly investors and some expert civil society voices, and we're aiming to produce public guidance that will come out in the autumn. Last year, we had an initiating group that produced a concept note on principles for responsible defense investment, PRDI, but don't worry, it's never going to be used again. And that kind of set out the scene and asked a lot of questions about where we should focus, what the limits of the scope should be, what was the best sort of implementation pathway. And we listened, and we heard a lot of feedback from people. And one of the key ones, actually, a lot of people don't like having responsible and defense next to each other in a title, which we listened to. So we've had a bit of a name change. We're going to focus on concrete guidance rather than principles for asset owners and asset managers. And the scope is very much on the operations and downstream elements of those defense-related companies, looking at design, development, sale, export, resale, use and misuse of weapons. So in one way, it's narrow. We're not looking at all of ESG. We're not looking at all of the value chain. But in one way, it's broad. We are looking at defense-related companies, from your ones that don't even trigger the dual use, but are effectively on the sort of the defense tech space, up to the ones with the bombs and bullets. And we want to address that gap, which really relates to how these things are used and how that relates to international humanitarian law and international human rights law. And potentially, I would say some of those gaps that haven't really been addressed before about when looking at defense companies. So the main objective is that we've got, if you're an investor who's committed already to responsible investment, this is who this is for. This is how do you implement RI for defense-related companies? What does it look like for that development and downstream use and misuse? And to do that, we also want to set some high-level expectations on companies involved in this to give us a common understanding and baseline. So we're hopefully going to aim to support a broad range of investors. You might be a very faith-based, divest from everything and not want to have any kind of association, and there should be some stuff that supports you there. You might be an investor that says you cannot be responsible unless you're investing in domestic defense, and there should be some stuff to support there. So it's not trying to reconcile the irreconcilable. We're trying to cover that sort of, I would say, broad church of investors. We've just started drafting, and I'll be engaging stakeholders over the summer to refine and develop that guidance for the planned autumn launch.
Thank you. And Camille, I think LBPAM is also a contributor to GRID. Could you talk a bit about why you felt that the initiative was important?
Yeah, sure. So as I mentioned, there was a context of basically a push first from governments in Europe, but also from clients, from asset owners, from asset managers to invest more in defense-related companies at large. However, it felt like at this time, so talking about the beginning of last year, basically, there was a lack of clear guidance on what can be expected from companies. So a lot of these investors, asset managers, asset owners ended up being in a situation that was basically two options. Either you do not invest in defense companies or you do invest. But in that case, can you really actually do something about the potential risks and impacts that arise? The second thing was there was a lack maybe of understanding, I would say, of how the industry works, so how long-term weapons programs can be, the relations to states, how the arms trade treaty work, export control systems, etc. So there's also a need to kind of give these key elements, I think, to the financial industry, for them to see how the ecosystem works and interacts with basically the rest of the world. And so, as I said, we had that human rights policy that already existed. So we were already doing a lot of work on the defense related companies at large through engagement, through exclusion processes and due diligences. So we wanted to kind of showcase what could be done from a responsible investment point of view with regards to the defense industry. So when we prepared our policy, we conducted a research on 30 major European defense companies on their downstream due diligence policies and processes at large. This research helped us basically outline criteria that can be applied to both assess the risks related to each company with regards to human rights and international humanitarian law, but also their capacity to actually prevent and mitigate or remedy these risks. And so the point, and one of the reasons why we want to contribute to GRID and why we contribute to it actually is the fact that we want to showcase that it's possible to actually have these conversations with companies, and there are things that we should be pushing for as responsible investors. So this is the kind of things we're bringing in. We're also part in France of the Club Investisseurs de Défense, which is the investors defense club, but the name is not good. It's a government thing. So we do have a bit of expertise in-house on how the industry operates at large. So it feels important to kind of share and again show that it's actually possible to do certain things.
All right, brilliant. Thank you. So I do want to move on to the next section of this webinar, which is dealing with the question of ethics. And we've assembled an exceptionally holy panel to talk about this with two church and one former church investor. So Linda, I wanted to come back to you. As a church investor, how do you balance fiduciary duty, the question of soaring returns from defence companies, with the ultimate principle of thou shalt not kill?
No, so I guess let's take a step back, because as a church investor, our policy and guidelines are built on two principles. It's the principle of human dignity, which means that every person has an unchallengeable worth. And then also the stewardship principle, which is about the responsible use of resources around us, the earth and all things living on it. And those aren't constraints on our fiduciary duty. They are our fiduciary duty. And we should not generate returns by investing in activities that contradict that mission. On specifically, thou shalt not kill. As mentioned earlier, our policy translates that into a concrete prohibition on weapons central to the combat function. Anything whose primary purpose is to harm or kill people in armed conflict. But there's also another dimension, and when it comes to the stewardship principle in our policy, is explicit. We are responsible for the planet's welfare, for ecosystem, for climate, and for biodiversity, both of the church as a whole and also in investments. And we all know that war is destructive to nature. And it's called ecocide, the kind of systematic, large-scale environmental destruction, as we see in conflict zone. It's forests and wetlands being destroyed, water is polluted, agricultural land is destroyed, and also the long-term carbon footprint of military activity global is enormous. And also the cost rebuilding a society and the carbon footprint. So I think also it's important to highlight that investing in defense is not just a human rights question, it's also an environmental issue that some of us are missing.
Thank you. And Dan, maybe turning to a church investor who's certainly made tweaks to their policy, the Church of England's Ethical Investment Advisory Group, yet another acronym, the EAG, put together a quite detailed note on the defence sector and how a church investor should be thinking about this prior to your policy change. Could you talk about the EAG note and also actually how stakeholder reaction to the changes have been within the Church of England?
Sure. So the Ethical Investment Advisory Group is a sort of arm's length body that gives high-level, non-binding, theologically underpinned advice to the main Church of England investors, and we support them to provide that to us. So that's us, the Church of England Pensions Board, and CBF funds, which are managed by CCLA investment managers in the UK. And that is Christian and distinctly Anglican ethical advice as well. So there's something So there's a broad range within theologically ethical advice on investment. They spent I can't speak for them as well, so they have a chair and a built body, etc. So we take their advice and we look at it and then implement our policies on the basis of our context. So they spent a lot of time looking at this last year, and that process starts with a theological reflection covering things like just war theory, pacifism, living in a world of sin, in the times before Christ's return, and the various positions within the Church of England, and then use that to come up with sort of tangible advice in relation to investing in companies, rather than sort of in terms of conflict or geopolitics. And it might be good to share that with attendees as well. So I just say that the advice is clear that neither pacifism nor just war theory offers really clear specific positions for Anglican investors on devoting capital to defence. And it notes a kind of lack of centralised position within the Church of England on arms manufacture, but does go into explore all of them, the ethical and theological problems with certain weapons and their use, and that extreme caution should always be applied when considering these investments and pushing for enhanced due diligence in line with human rights norms. So it does recognise that manufacture of weapons can be legitimate. And so that would say to be quite different to say something that came out from the Vatican called Mensurum Bonum that talks to Catholic investors and says that basically the companies are engaging in reprehensible business. So there's a broad range of ethical advice for that. So we've looked at it, implemented it. In terms of stakeholder response, it's kind of probably where we thought it might be. There is a very broad spectrum of views within the Church of England. There is no unified central position. If I had to say a center of gravity, it might be around just war theory, but actually there's a very strong and very legitimate pacifist group, and there's a broad spectrum within there. So we've heard from different areas. Some sort of this kind of makes sense. We shouldn't be investing there. We should be investing more here, and others that, particularly from say the pacifist side, are not necessarily supportive of that. And we can be honest about that because we don't have this unified thing like say tobacco that everyone combines around. And just just with Linda's point there, our fiduciary duty is to make basically risk-adjusted returns to provide support to the church so that they can do and support the church's mission. Ours is not to we don't have a fiduciary duty to bear witness or to support the church's mission directly through our investments. And so again, this comes back to the fiduciary part about how you look at restrictions in the whole and what that might mean for your ability to invest long term.
Thank you. And if we have time later, I want to come back to that question of legal fiduciary duty, which I think has been certainly an interesting question for UK investors at the moment. Maybe going to Anna, could you talk a bit about how the Church of Finland was thinking about this as a church investor?
Sure. Yeah, well, working in the church context, the central question has always been how to align strong ethical values with real-world responsibilities, and responsible stewardship has always been important for me personally, and fiduciary duty in that context is not only about returns but about safeguarding more long-term stability for the pension beneficiaries. I must say that what became clearer over time that it's not the change in values, but a more deeper understanding of how to apply them in more complex situations that my time during the church sort of did with me, sort of, if you can say like that. And I think that strong values need quite structured processes to guide difficult decisions. As mentioned also in my previous answer, the Church Pension Fund Finland applies strong exclusions or tight exclusions related to weapons, and also strengthening the risks linked to armed conflict and human rights in various other companies that have some form of allocation towards defense. In practice, also external screening tools were used to identify companies that were involved in some kind of controversies, and not only limited to defense-related topics, but also on environmental, labor rights, governance type of questions. And a continuous dialogue were also held with fund managers, especially in those portfolios that held companies operating in sensitive regions. And I would say this engagement process, the discussions were a result of many years' work, going more in depth and understanding the positioning of external portfolio managers' holdings of certain companies. And I would say that another complexity that became clearer was also the exposure to defense that is not always direct through weapons companies. So, for instance, many industrial or technology companies support defense supply chains as only a small part of their business. And these companies are often already present in diversified portfolios. And with the question that many of the defense-related activities are also under secrecy rules, or companies have agreements in place with the governments, make that analyzing them and their revenue sources and also their supply chains carefully is not always the most easiest of tasks you do as a portfolio manager related to these companies. But also if we look back towards or to 2022, I can tell that some stakeholder expectations shifted somewhat. There were more questions coming in from NGOs who were interested in what kind of exposures church pension fund held, especially regarding conflict-affected regions. For instance, Israel was in headlines during those years, and some NGOs wanted to know the exact exposure of the pension fund to that area. But also, quite interestingly, or not, depending on your viewpoint, it's from an internal employee survey. There could be seen a rise of the importance of SDG 16, the peace, justice, and strong institutions goal that rose above the importance of, say, the goal, the SDG regarding climate change. So that was also reflecting how global events shape expectations within the organization. But I would say, looking back,
I think we might have lost another. Anna, can you hear us?
Necessary help to give simple answers in an investment context, and the goal is not to remove only this moral tension question, but to manage it responsibly. And then you have different tools like exclusions, strong oversight, and an ongoing dialogue with the investment companies.
Thank you very much. And I think that tees us up nicely to go into the next section, which is on market complexities and difficulties. Aleksandra, coming back to you, could you talk a bit about the challenges that investors face when they're reevaluating their approach? And has it been challenging to get across European consensus on some of these questions?
Yes, thank you, Dominic. Indeed, I think this is definitely not straightforward and very complex issue, as we've already actually heard, I think, from different speakers today. So yes, maybe just to also kind of like set the frame and going, step backwards and thinking about actually who is really responsible for defense financing, because, I think the bottom line is like, obviously, there is a clear need for us, also Europe, to be able to defend ourselves. And I think, the current geopolitical context even further highlights that. So it is clear that there is a need basically to invest in defense and ensure that we have basically the proper equipment and enough of it. But yes, we need to clarify the roles. So basically, governments, it's the primary responsibility of governments for defense capabilities and spending. Investors allocate capital based on fiduciary duty, risk return and client preferences, and of course then considering whether that is something that can be considered as sustainable or sustainability related, right? So ESG investments or not. So the bottom line here is that the private finance can support but not substitute public responsibility for defense. So that's already kind of one consideration. But now, speaking a little bit more, I think also practical challenges for investors, and putting maybe the regulatory aspect aside, which I have already addressed before. Indeed, I think investment in defense, it raises a combination of ethical, regulatory, and operational challenges, and of course, sustainability related, also environmental considerations, right, as it has been already mentioned before. So in the context of, even speaking from the kind of, more ESG risks perspective, yes, indeed, investments in defense, well, they have high environmental footprint, right? High emissions. So that is already, also one consideration to, make on the kind of a risk, but also impact investment side. And I think an interesting debate here is also, of course, to what extent maybe if there is, for instance, certain weapons produced using more low carbon methods, whether that could be, considered more on the kind of I would say, sustainable on the environmental side. But again, I think that's quite a controversial topic as well, given that, at the end of the day, yes, given the EU framework, of course, you need to also meet the do no significant harm criteria, right? And also minimum social safeguards. But once again, there is also, for now, quite a lot of flexibility in terms of actually making this judgment. Now, in terms of course, there are human rights risks, as we already discussed. There are also governance risks connected to corruption, opacity of existing quite a lot actually in this sector. Also data limitations connected to confidentiality and often insufficient transparency. And finally, I think something that is, still also a challenge is the fact that here considerations are not really science or technical really based, but values based, and values are diverging and very personal. So yes, in coming back, to the kind of, I would say the ESG risk profile is definitely, quite high given the considerations mentioned, so both on the environmental side, but also social risks, so including, going through the value chain, hence, the importance. And I think this, what some of the speakers have already mentioned, the kind of principles for responsible investments, which I think indeed are quite important in this context to ensure that investors do due diligence if they decide to invest in defense, to try to understand whether there are any, human rights breaches, concerns, etc. Then also, on the governance side, okay, how high is the risk of the corruption, some kind of a state relationship, and overall, it's true that, defense is typically seen as a higher risk ESG sector. Then in terms of the end use and traceability issues, a major challenge is how products are ultimately used, which of course, investors, can't really know. And it's especially difficult with exports to sensitive regions and dual use technologies. So while of course, as investors can assess the companies, but they don't necessarily know how the products are eventually used in practice. And the bottom line is it's usually the same companies that, will produce different types of weapons that are sold in many different ways and to different jurisdictions. In terms of data and transparency constraints, defense companies usually operate under confidentiality and national security restrictions, hence limited transparency on supply chains, clients, and due diligence processes, which obviously make it more difficult actually for investors to perform proper due diligence. And eventually, with regards to the client expectations and mandate, as already mentioned, it's crucial that asset managers basically stay closely in touch and consider the end investor preferences. So yes, to sum up, the role of investors is, very important one. What they can do is, of course, they can screen across the companies. They can, select. They can also engage basically with the investee companies to, I would say, persuade them to improve the processes. Yes, in terms of the, I would say, European level, approaches are very much diverging. This is, very much, I would say, driven also by the national history, context, values. So to answer your question, no, there is no single European consensus. And I think that definitely makes it obviously a very challenging debate, especially in the current geopolitical context. And that is why the EU regulatory framework, kind of reflects that by staying neutral and leaving the final judgment to investors.
Thank you very much. And I think even among our panelists, we're showcasing the diversity of opinions on the topic. We do have a fair few audience questions on dual use and tech, which I'm going to get to in a second. But Camilla, I know you have to leave us a bit early. So could you talk a bit about your engagement and stewardship approach and how responsive you felt sector companies to be?
Yeah, I would say as any company in any industry, it basically depends on how you actually approach the issue with them. If you wait for a controversy to arise and speak about a specific contract or a specific client, very likely the company will not be that responsive and will probably just say that the information is classified or whatsoever, and you won't get much out of it. However, if you do conduct your due diligence beforehand, it basically allows you to have a more exhaustive and more comprehensive approach. So it will allow you to actually maybe understand the risks that might be related to the very specific products that the company might be producing, to the weapons programs in which might be involved. You might also be able to identify the main clients, and although you do not know necessarily what exact type of technology is being used or how it's being used, you can apply a risk-based approach. You can also assess the governance. What processes do they have in place? Do they have any human rights expert in their export control departments? Is there any training for these people or for the salespeople? How do they monitor clients that are most at risk? So there are plenty of questions that you can use. And this is helpful in two ways. First off, you can then have the discussion with the company at a more of a governance level, I would say. So instead of focusing on one specific client, which they will not like, you focus on how they actually operate, and you point out that it represents a risk to you as an investor, which allows for a more constructive, I would say, discussion. The second thing I would say about the sector, and that is a bit more specific, but they have a tendency to believe that the investors, especially the ESG people, do not understand what they do. So actually showing that you've done the work and that you do know what you're talking about is generally quite appreciated and helps the discussion. And I would say one final thing that also kind of is a conclusion to that due diligence is that it allows you to also prioritize maybe certain actors with which it is worth engaging and with which you might have a bit more success for many reasons. But you can take cultural reasons into account. You can take the fact that they're maybe already a bit advanced and that you have clear expectations on what they need to do more than what they're already doing. But it can also allow you to maybe see those areas where you might lack leverage and try to seek leverage elsewhere. So either through collaborative engagement or through other investors that might be a bit more, well positioned to have the discussion with the company. I would say the cultural element is specifically important in that case. But basically, there are plenty of ways. You just have to think about that strategy before going to the company, and conducting your own human rights due diligence as an investor basically allows you to do that, I would say.
Okay, thank you very much. So we'll get on to audience questions now. And Dan, I think you've already typed a short response to this on engaging with tech companies. And I think that question of investors in tech, which is almost impossible to avoid at the moment, getting some kind of inadvertent exposure to defense and military usage as AI becomes increasingly integrated into military systems. Dan, could you talk about that? And then anyone else who wants to chime in as well.
Yeah, it's developing, right? So it's a developing area with a lot of this. And the defense tech space getting closer and closer to kinetic action. That's a sanitized way of saying that the companies that were not traditionally restricted from defense screens are more and more getting involved in killing people. That's like, there's probably no RI, don't take this out of context, but if you're supporting the targeting and the selection and the ability of pressing the button with them, you're very much involved in there. I think one of the things we're going to see more and more of is the idea that these nice fine lines of that's a weapons company, that's a parts company, and that's a dual use tech company, that's going to change. And we're going to be looking at these tech companies through the same lens as the weapons company. And that means a lot, right? Because people have been happy to restrict 2% of the global universe, whilst benefiting from the advances in tech and the boom in there. But when you look at the proportion of the universe's investable that is these tech companies gravitating towards military and defense, that's a whole different question. You can't just exclude them, depending on what type of investor you are. And from a human rights side, you can't just ignore them either. So I think that's going to be more and more an issue that people are going to have to deal with. And hopefully that's something we'll try and look at as well with the GRID stuff.
Thank you. And anyone else who wants to talk about that, feel free to.
No, but I could just jump in with another perspective on that, because what's also an interesting angle of the dual use product is that some of these technologies are very important for the green transition. And it's also deeply attracted to the defense sector. So this is also a new challenge, a new way to look at it. How do we both hold our climate commitments, those who have them still, and our weapons exclusion consistently? That requires another analysis, another analytic capability that I think the industry is still building.
Okay, and on this discussion around dual use, I think we've had a few questions about companies who are kind of 1, 2, or even 3 steps removed from producing a tank or a bomb. Do we have the data that we need to provide that company look through? And how are investors thinking about this kind of dual use and supply question?
I was about to say that I needed to leave the call, but now that you asked the question, it feels unfortunate. So I would say, again, drawing back from basically human rights due diligence, there's actually a lot of data that you can find online. So one of the resource we use the most is not traditional ESG data, though, but one of the resource we use is a document made by the French government on, I think it's about 80 European defense companies at large, that explain basically with what clients they work, with what customers, what type of component they actually supply. So it goes a bit farther than just the ones, actually finally producing the missile or the bombs, but it also takes into account the engine producers and developers, maybe some tech developers or service providers. So it's a bit larger, and you can actually find all that information quite publicly. If you take it into account, then you can, again, apply the same rule and actually have that discussion with these companies too. And it's important to still do that engagement part and also integrate the results of your due diligence within your investment processes, I would say. Because, again, it informs you also on the level of maturity of the company and its capacity to actually identify, prevent, and mitigate the risks in the long term, be it on the human rights side or the environmental part. And on that, I am unfortunately going to leave. So I thank you very much for inviting me to this panel.
Thank you very much for your contributions as well.
Dominic, I can just follow up on that. So, because I was looking through that because she told me about it yesterday. So I was reading through, and one of the things it doesn't cover is a lot of the stuff that investors would be looking at in terms of that downstream due diligence part. And that I know investors are hungry caterpillars when it comes to data. If no one has the story of the hungry caterpillar, it's just more and more and more and more that we want to have. It's really hard to get data on where products and services are being used and misused in relation to conflict. And that is not helped when data providers switch off conflict-related data. That makes due diligence harder to do for investors and to understand their risks. I saw some of the questions coming up around the war crimes being committed and extreme human rights violations. That's exactly where we need that kind of data to understand where these kind of IHL breaches, so international humanitarian law breaches, are happening and how the companies are responding to that, and how we look at it through a legal complicity lens as well as a human rights due diligence lens. So there is a need for more relevant data. With the initiatives that we're talking about, hopefully is that we can coalesce and convene investors to demand that data, and that the products are created to enable us to do the due diligence down the line.
Thank you. And we've had a few questions asking for a link to the document that Camille's mentioned. I think we should be able to add that to the link that Carol's shared to resources on the JA website, hopefully. So, Dan, you're typing a question I'm just about to ask you. There is a question about Volkswagen, which is reportedly in talks to convert one of its lesser used plants for missile defense production for Rafale advanced defense systems, so I think make the Israeli Iron Dome system. Does a news story like this prompt a re-evaluation of a company's ESG profile, or are these deals too small to be material from this kind of lens?
I suppose it's hard to say. We don't really do a lot from that kind of bottom-up ESG part, but I think for these, and you can see from the tech companies where they've been involved with certain governments for certain types of projects, the human capital issue of who wants to be working on defense versus who signed up to work for a car company can be a key issue that would sort of come in there. I think from a financial side, they're seeing the opportunity and the need, so you can see that on the positive part as well from the opportunity. But too soon to say. That would go out the FT today, I think, didn't it?
And I can maybe add a comment on that, and also referring to a question earlier on regarding an investment 1 to 3 steps away from weapons manufacturer, like a software company. So just as a starting point, I would look at how much of a revenue is that sort of controversial activity part of the company that you intend to invest in. And in the case of Volkswagen, maybe also what portion of the total company that would be become then. So how big of an impact does it have on the overall ESG scoring or analysis of the company? So to take things into a perspective, this could be a good starting point.
Thank you very much. Linda, do you have anything on Volkswagen?
No, I have nothing to add on that. But also, I mean, I think we all have experienced that some of these companies in the sector that has been hard to engage with earlier are now more open to share what they can share. And I think that's also saying something of a company that is willing to be more transparent. And if it's not, that's saying a lot.
Absolutely. All right. Well, I think we are just about running out of time. So it just remains me to thank the panelists, and I'll hand back to Anna to close this out.
Yeah, thank you very much, Dominic, for guiding this discussion. It has been a very interesting one, and big thank you also to all speakers today for your valuable insight and for engaging with the questions from participants. And as we have seen a lot of questions, we still haven't answered all in detail. We very much encourage you to continue the conversation with us. And with that in mind, for those who are interested, we are planning to organize a small, by invitation only roundtable, continue discussing this topic. The invitation will be sent out only to the webinar participants today. And there it's possible to have a more focused and practical exchange. And you can look more on these resources on LinkedIn, on the Global Advisory Alliance website, and as well, if you're interested in certain specific questions, you can always email us on team@globaladvisoryalliance.com. But with that, once again, thank you all for joining us today, and we wish you a lovely rest of the day. Thank you. Bye-bye.
Thank you.
Thank you.